Welcome to another episode of Real Estate Mogul MD. I'm joined here with Brett Riggins as well as
Yo,
Jennifer
yo,
Spicer with Great River Federal Credit Union. How are you guys doing today?
doing wonderful. Jenny, how you doing today?
Good. Good morning. Doing pretty good.
Awesome, awesome. Well, I'm doing wonderful too. We had just chatted off note here about the weather and getting into it, kind of getting to know each other. Uh, and Jenny and I have worked together on a couple of deals here so far, and I'm so excited to have her on the show this morning and talk a little bit more about product. And I just kind of want to start this off. I've always said that I love working with physicians in the real estate world because as a high earner, you have the what I call the gas for the engine, right? And the engine is real estate. And I was just thinking of this morning is really, really cool. You think about it. I think lending is the transmission for this engine that we're talking about. Because if you think about it, if in the lending scenario, we're leveraging this debt, which is creating this cash flow, and we're amplifying our return on our investment. So as the transmission in our engine here, Jenny, thank you and welcome to the show.
I'm happy to be here. So thankful that you guys invited me on.
So I know our paths cross, and I often talk a lot about, building a real estate team and how to do it and where to do it. And this is a perfect example. We had one of our market directors, our acquisition managers, actually connect with you through Facebook. And that's exactly what I'm telling everybody. It's like you can connect with so many people through different platforms, and Facebook and the investor groups are absolutely one of them. And that's where that's how we got connected, isn't it?
It is. It's exactly how we got connected. I
Yeah,
don't
cool.
remember exactly which page it was, but I knew that my information was out there and he touched base with me and I was excited to hear from him.
Awesome. Yeah. So using those different platforms to leverage, and that's really what we're talking about here. Can you give us just a little bit of background information, the story of how Jenny ended up in lending?
Well, I've been in real estate for about 25 years and I just started it as doing it part time. I was young. I had two small children. I was married and got twin boys. So they're 23 now, but I needed something to do in my spare time. So I went and got my real estate license and did that for several years. And then I kind of transitioned into hospitality, believe it or not. I managed hotels all over the United States as a
Oh,
director of
wow.
sales and marketing and corporate sales manager, managing hotels. I really enjoyed that. I'd done it in Florida, Mississippi, Texas, Tennessee, just a little bit of everywhere. And I had life happen to me and took a little bit of a break and moving back towards getting myself back on life's path. I was going to reenact my real estate license and I had a lender approach me for a processing position. I said, well, I've got plenty of years of real estate experience. I know contracts. I know all the ins and outs of, how to close on a house, how to sell a home. Let me learn the other side of it. So he hired me as his processor, and then I moved up from processing to junior underwriter and then loan officer assistant. And through all of this, I'm thinking to myself, I can do this. I know sales. I know, I'm not an office person. Like, I want to be out there communicating and building relationships, with good friends and, make my family bigger. So, I got my mortgage license and it just took off from there. I've been with 3 different companies in the past 10 years. And each time I've moved, it's because, there's been bigger and better opportunities. And I just wanted to continue to move up I just wanted to continue to make lateral moves. So recently when I came on board with Great River, prior to that, I was just doing mortgages. and mortgages moved into, hey, Jenny, we have an opportunity for you. You're really awesome at what you do. You connect with people very well. You know the sales side. And that's exactly what I wanted to do. I wanted to grow bigger and do more. And so the opportunity with Great River was not only residential, but it was commercial, it was auto, it was land loans, it was, consumer business loans, equipment, it was agricultural, it was everything. And being in North Mississippi, where I'm at right now, it's very rural. And I felt like I was doing my clients a disservice by pushing them to other lenders because I couldn't provide a service for them. And so this opened up a door for me to actually keep my clients here with me, and keep that relationship where they could actually come to me for all of their lending needs. That's where I'm at right now. I've enjoyed it.
Go ahead. We got a little bit of a delay. So that's kind of where we're at now. You said moving to where there's more opportunity. And since the very first conversation I've had with you, Jenny, Great River has a product offering that it's still to this point. I have big eyes, like when I'm thinking of it, because there's so much that you're able to offer your clients that there's nobody else out there that's offering anywhere close to this. This is really important too, because I know a lot of physicians, I see them on Bigger Pockets. I see them in different areas saying, I need to learn more about financing, right? And if for a physician who has that income, has that base to lend against, it's an attractive lending scenario. So I know that you guys love to lend to physicians, but I want to learn more about the product that you guys have, because I think that's really what separates Great River from other people. And it may have been what drew you to Great River, it sounds like, in the first place. What were some of those things that you like about Great River?
Well, the story of Great River is it was a very small credit union, and it started up in St. Cloud, Minnesota. And the name Great River comes from the mighty Mississippi. So as you go along the Mississippi River, it gets wider and it gets bigger, and then you have more rivers that flow into it. And our company motto is every story matters. And with that being said, it's every story, every family, every loan. It's let's meet, let's talk, let's find out what your needs are. They have this passion and this drive to help their clients, to figure out a way to fulfill what their financial needs are, and how we can help build, financial stability and wealth for them as well. And because that keeps our relationship with them. There's no need to go anywhere else when, they can come to us and find everything that they need. So some of the products that, as I was talking about, our land loans, our commercial loans, we are one of the very few lending institutions out there that will actually finance barn dominiums, which is, a new and upcoming thing. Yeah. They're really popular down here. I don't know how popular they are up south, up north, but it's it doesn't get as cold here, so it's logical to have those. And then all
the barn dominium,
everything else.
is basically like a pole barn style build that's inbuilt or infilled with residential construction, basically. So it's pole barn, and you basically build a house out of it.
Yeah.
Yep.
So you go back in there and you put your walls up and design it however you want. And, it's got 2, 3, 4, sometimes 5 or 6 car garages and workshops and places that, it's easy to get to your horses or animals or what have you right from the barn.
Yep. Very cool.
So it's not just that. It's, one of the things I found interesting was, we do recreational loans. So ice houses, consumer lending, business loans. Also, I think I mentioned land loans, agricultural financing as far as equipment goes. We've got companies that are building commercial properties One of them I'm working on here right now. It's a huge development. So we are going to be doing the residential side of this development, and then we're getting ready to close on the commercial side as well. So giving those resources to our builders and developers is extremely beneficial to them. So we start on that one, and then it goes into the equipment that they may need to build out these developments. And then it might be, hey, we need another loan. We've got to pay our employees. So we'll pull that in too. It's just an all-encompassing product line that was very exciting to me because I feel useless if I have to send somebody else. Like, I'm happy to have my clients serviced. If I can't help them, I'll find somebody who will. But now I can help them. And that's, when I was in hospitality, that's what I did. I helped people, made sure that their accommodations were correct, and pulled in the sales side, weddings, so forth. So I'm a busybody in that aspect of always trying to make sure that everybody is happy and satisfied. I certainly don't want them, seeking any of their financial needs elsewhere. Because, we were talking about the physicians and servicing them. We have, a lot of very financially stable clients, members that have recently opened their CDs, their IRAs, their 401ks with us as well. So that's even beneficial for them.
Yeah. And
the return on it is, it just can't be beat. And the same with my residential, my 5/1 ARMs, FHA, VA. It's a never ending product line.
Awesome. And I started to talk my language on some of these things here, touching the thing that jumps out to me most, that wanting to offer to your clients, no matter what, there's a unique thing about Great River that's unlike other places, is that you can do 50 states, right?
Yes, all 50 states.
That's huge. A lot of lenders will only lend based on where you live. Right. So if I'm based in Texas and I'm buying in Memphis, I may need to have a lender out of Texas in order to fund in Memphis. Or if I live in, the other way around, if I'm living in Tennessee and need something in Texas, there's that thing you just push right out of the window with Great River because it doesn't matter.
No, it absolutely does not matter. And that was important to us because not only lending, but also building the credit union's membership, because with the credit union, as you guys may know, that it's all funded by our members. That's where all of the money and so forth comes in. It's all coming from our members, which gives us great opportunity. It lowers, rates and that we can offer them, which makes us extremely competitive.
Yeah. Yeah, absolutely love that. So the 50 states, that was huge. And then the rates and the products that you offer. And for us, one of the things that we're looking at is basically helping physicians go from, say, 0 rental properties to 12 rental properties in 1 year. And in order to do that, we've got to get things rolling, and we can't stay inside the Fannie Mae, Freddie Mac box. So with Great River, being that it's member funded, I think that's what removes some of the restrictions and red tape for us. It offers us this product. And I heard you say the 5/1 ARM. So that product I like a lot right now because of where the prime interest rate is. And it almost doubled in the last year. The prime almost doubled. So that was remarkable. But with that 5/1 ARM, it is nice because we can keep the interest rate down. And then you also do a 30-year amortization on that 5/1 ARM. That allows us as investors to still go after that arbitrage in the mortgage, between the mortgage payment and the rental income. And that's what creates our cash flow. So again, something that
right.
sets you guys
and the
out.
5/1 ARM can actually the terms can actually extend all the way to 40 years on those 5/1s because they're considered portfolio loans.
So when it jumps up
Oh, I'm
Yeah, go
sorry. I
ahead,
didn't mean
Thomas.
to interrupt you
No,
there.
go ahead.
Could you explain for anyone listening who doesn't know what a 5/1 ARM is?
Absolutely. So a 5/1 ARM it's an adjustable rate mortgage. For the first 5 years, you're going to have I'll give you an example of the current rate that we're offering. So we have a 4.99% interest rate. And for 5 years,
Hold
you're
on, say that
locked in
again.
at that
Say that
4.99.
again, because
Yeah.
there's not a lot of people out there
4.99.
right now. Yeah, there's not a lot of people out there offering that right
Yeah.
now. And at where, I'm typically seeing at least a point, 2 points higher than that right now on the market. So just a kind of point of reference for that. So sorry, I didn't mean to interrupt.
Right,
That was a big point.
That's okay. That's okay. Everybody gets really excited about it. So you're locked in at 5 years. And let me rewind a little bit and explain why a 5/1 ARM is beneficial on this portfolio loan. You're locked in for 5 years, but say you close on your house and 30 days later, not to say that this would happen, but one of our members sees an interest rate that's appealing to them and they decide that they want to lock in for, 30 years rather than having an adjustable rate. So what the portfolio actually allows them to refinance it into a conventional mortgage without any prepayment penalty. There's no waiting period that you have with conventional and FHA loans or VA loans, as well as also USDA. So that's one of the reasons that it's extremely appealing to some of our members that have taken advantage of this, is because you can lock in at 5 years. However, you can watch the market move up and down. If you choose to refinance that into a locked 30-year rate, you can absolutely do that without any prepayment penalties. Whereas, FHA and a conventional loan, you typically have to wait about a year before you can even refinance. And it's especially appealing to commercial and investors, because if you're purchasing a home and you want to flip it, we can do these on buy and holds or fix and flips. If you're buy and holding it and you're flipping it into an LLC, we can do that too. If you have a traditional mortgage, you would have to wait at least 90 days before you could sell the home. To refinance it, you would actually have to wait 8 to 11 months to be able to refinance it.
Yep.
So you said it's locked in for 5 years and it's adjustable. That locked in for 5 years is a fixed rate, or is that after the 5 years is adjustable?
It's a fixed rate for 5 years with a 6-point cap. So on year 6, depending on what rates are, your interest rate could go up 2 points. So it can only go up one time annually by 2 points. So year 6 comes around and on year 5, your rate's 4.99. On year 6, the interest rate's going to be 6.99. Now the floor on the 5/1 ARM is 2.75. So if interest rates have dropped, you can drop down lower than a 4.99. So 6-year, it could possibly go up to 6.99. 7-year, it could go up to 8.99. And by the 8th year, it actually caps out with that additional 2 points of 10.99. And the interest rate itself will never go higher than a 10.99. But with that being said, a majority of buyers and homeowners, they will either do one of two things within 4 to 7 years of owning a home, sometimes sooner. They will either sell their home or they'll refinance it to get the cash out. And that's just standard. Very rarely do we see somebody that just continues to hold on to a mortgage and say, hey, I don't need this cash out. So it's extremely appealing, and it can always, once you cap out at 10.99, again, if you decide to keep that 5/1 ARM for the 30 or 40-year term, it's possible, if interest rates are lower, that you could hit that floor, but you're always going to stay within that 2.75 to 10.99 range.
This again, I kind of
38
blow,
rate.
I kind of blow by this stuff. I get so excited, and there's so many more pieces of this that I think is unique about Great River. But I kind of get past the front end of it, and I appreciate you asking that question, Thomas, because I want to touch back on that 5-1. And when you're looking at ARMs, the adjustable rate mortgages, you're going to see two numbers. You're going to see the first number, a slash, and then the second number. And this, we're talking directly about a 5-1. That means that first number is the locked in rate, the locked in length of the 5 years. And then that second number is the adjustment period, right? So if it's a 5-1, it's adjusted
Right.
one time every year. But if it's a 5-3, then it's adjusted 3 times per year after that 5-year fixed rate. Is that correct, Jenny?
Yes, that is correct.
Okay.
And there's no penalties to refi at any time, or
not with their product.
Right.
There's no prepayment
That
penalties.
sounds really attractive for investors.
I know. I wish I would have had our first call recorded, Jenny. Do you remember? I mean, I was standing right here in this room. I remember talking to you on the phone. I'm like, let me ask this question again, right? And make sure I'm saying it right. There's so many pieces of this product that Great River offers that I absolutely love.
Well, you did have to ask questions over and over again because I don't think you believed what I was telling you.
There's no prepayment penalty.
Wait a second, let me get that one. Yeah.
And then the other thing too, the personal versus LLC, you touched on that just briefly there as well. So again, we're not inside this box of what everybody is accustomed to, what everybody's used to doing or seeing. There's no seasoning. There's no requirements when it comes to who owns it or how long you owned it or anything like that. You guys can lend to personal name or in LLCs, no problem.
Yes, absolutely. So typically what happens is, we have an underwriting department that strictly does residential, and then we have an underwriting department that does commercial or member business loans. So whenever you come into the LLC side of it, it closes exactly the same way that you're going to close on a residential mortgage, but we just have an underwriter on our commercial side that underwrites all of that.
Okay. And now getting into some of these deals that we're doing together, I'm looking to shift the transmission into overdrive, right? And to really do that, we're talked about even financing some of these deals right out of the gate. So we're not practicing the BRRRR strategy necessarily, where we buy it, renovate it, rent it, and then refinance. We're actually financing it right out of the gate.
Correct. And, especially when you're purchasing properties that may need a rehab on them, the 5-1 ARM, even at the 4.99 rate, we actually will offer, the purchase price of the home plus the rehab amount. And when you combine those two things together, it allows your investors to actually come in, purchase a property, not have to pull their money out of, wherever their safe haven is. It eliminates having to have two separate closings, which is also saving your client money. It's one closing, one appraisal, and it's all in-house. And you're not having to go back and worry about, okay, where are all the receipts for this? Where's the work write-up for this? So it pulls everything together and just, allows the transaction to move much smoother and much quicker.
Can I do that in 14 days? Can I do that in 21 days? I mean, what's the time frame? Say, hey, Jenny, I've got this house. I would like to put it in contract today. How soon can I close for a financed purchase?
For a financed purchase, you're really putting me on the spot here.
Come on.
We typically we like to say 30 days. However, there are circumstances where, I will work with my borrowers to make things happen quicker. It just depends on, the relationship, where you guys are at in the process, what needs to be done. I can't guarantee anything less than 30 days.
Yeah.
However, a majority of the loans do close in less than 30 days.
Okay. So say if we are targeting 30 days, but if we got things lined up, obviously, getting the appraiser in, knowing the process and getting through multiple deals together is really important. I express this so much when we're building a team that the time, time under the bar, right? The time under tension, the deals that you've gone through, you really create these processes and these systems to roll things out efficiently. So it could be likely that we could wrap them up under that 30-day process. As long as we got it dialed down, I knew what to provide you, you knew what to provide me, we knew when to get in and all that stuff.
Absolutely. And, when you're dealing with, multiple properties, as, we've done together, when you have individual physicians that may, acquire, 1 to 12 properties over the years, one of the things that we've touched on before is how important it is to, if you have a property, go ahead and get the address over to me. Let me go ahead and get it processing. Let me move it to my underwriter even before I may have a contract on it. Because this eliminates having to repull credit. It eliminates having to ask for more documents. It eliminates, time that we're going to need to get an appraiser out there. So it really does shorten the amount of time, from start to finish. And so, when I say, 30 days, it really depends on, okay, do I already have your paperwork? Do I already have all of your documents? Because once I have those bundled the first time, I can move much quicker because everything is in one place and my underwriter doesn't have to go back and open up a new file somewhere.
Yeah. That's an awesome advantage. And I appreciate you saying that too. I think it may have slipped my mind, getting you the address to these properties as soon as it's disbursed or, I guess given to a client, say, okay, this is going, we've got it in paper. The physician that's going to acquire this property is Dr. So-and-so. Here's the address, Jenny, let's rock and roll.
Yeah, it moves a lot faster. If I just have an address, I can move because I've got everything else. So all I'd have to do is, open up another application and fill in the new address and push it over to my underwriter and say, hey, this is what we're working on next. Go ahead and get started on it. I spoke with, with the member and they have, provided a date that an appraisal can be done. We'd like the closing date to be this. We are a really great team. So if I go to my underwriters and I say, hey, I need to close this in 21 days or less. Let's see if we can make that happen. And they push themselves and they do make sure that, we are getting things done and we're getting them done quickly.
That makes me think, I'm kind of like learning the processes with Great River too. On a refinance, the renovation needs to be complete 100% before the appraisal happens. And the appraisal has to happen before we can take the next steps anyway. So that was kind of like a learning lesson there for me, right? The renovations have to be 100% before the appraisal.
Now, where the learning experience was there is there were some properties that were previously purchased. They were financed outside of Great River. And because they were financed outside of us, that's where we had to make sure that the renovations were complete. Now, if they're financed within Great River from the beginning, from start to finish, then the appraiser can actually go out there prior to completion.
Financed or purchased in cash is the same as long as it's not, right? Does it make it any difference if a property is bought in cash and the renovation is happening? Does the renovation have to be complete before
yes.
the appraiser happens?
It has to be. If it's not financed and we are not providing the rehab costs for the property, then we have to have the property completed.
Okay.
And then once it's completed,
Perfect. Some other things that I have here that stand out too are the LTV, loan to value, and you're going to hear this a lot when you're leveraging capital, leveraging debt in real estate. Can you tell us a little bit about the product? Say on the 5-1 product, what does that LTV position look like for Great River?
So the LTV on the 5-1 ARM is 90%. And what that means is that, means we want 10% down. We want 10% of some skin in the game, and we can move forward on it. That is not that 10% is not a fee. It actually goes towards, it pulls down what your principal value is. So it's actually, you're putting a down payment.
So of $100,000 all in purchase and renovations, the 90-10 scenario would be the loan amount would be $90,000. The $10,000 the physician would have to bring to the table at closing to pay down to pay down the purchase if it's a financed out front.
Correct.
So the physician would bring $10,000. Great River brings $90,000. That's a 90-10, 90% LTV.
Yep.
And is that just for investment properties? What if it's a primary resident purchase and they want to do a 5-1?
That's for primary residence as well. So anything on, and either or, whenever I was discussing the terms of it, 30 or 40 years, it's still 90% LTV.
Gotcha.
And that 40-year amortization jumps the interest rate up just a little bit, right?
No. So the interest rate stays at 4.99%. Yeah.
Why wouldn't you choose why wouldn't you use a 40-year amortization?
Okay, so if you've got somebody that may make it their forever home, they might want a lower payment. So, an additional 10 years on them they're like, okay, I'd rather have the lower payment. However, if you go with the 30 years, while it's amortizing, you're going to have more money going towards your principal rather than your interest.
Yeah.
You stretch it out over 40 years, it takes longer to pay your principal off.
Yeah, I have to run some projections on this because that decreases the payment. So it increases the arbitrage or this cash flow that we create. And I'm looking at stacking 12 of these things together. I'm taking that cash flow and I'm focusing it on a principal. And by focusing on a principal, I'm not acquiring these additional interest payments on top of that. So I'm very curious to run the 40-year amortization with that projection, with the 12 property projection, because if I can increase my cash flow right out of the gate, I'm going to pay these down faster. Very interesting.
Yep.
Yeah, it is. You were to hold it
all over again.
40 years.
I know.
If you were to hold it for the 40 years versus the 30 years, you'd have more interest. But
yeah,
I guess it just depends on how fast you can get it paid off.
We saw a stat somewhere that I can't remember where it was, but anyway, that average a majority of homeowners sell their properties within the first 7 to 11 years. And that helps helps lenders out, because if you think about the principal and interest diagram, how they run out. When you first start a loan, you are paying much more interest than you are principal, right? And then as time goes, you start paying more principal and less interest. And what happens in the 7 to 11 years when everybody's selling is that you're actually staying on the front side of that curve, and you're actually staying in a higher interest portion of that curve as well too.
Right.
So,
and I want to throw this in too, because I kind of leave it out sometimes, just not thinking. The 5-1 ARM, it also does not require mortgage insurance. A conventional or FHA loan, you're going to have mortgage insurance on an FHA loan for the life of the loan, and that could be anywhere from $80 to $250 a month. That's a huge savings. If it's set on an average of $215 to $250 a month over the span of 5 years, you're saving between $12,000 and $15,000 right there. On a conventional, you have to wait until you're 20% invested into the property before you can have that mortgage insurance released. However, on the 5-1 ARM up front, there's no mortgage insurance.
Awesome. And this is otherwise known as the PMI, right?
Yeah.
PMI. And I remember on our first when we got married and we purchased our first home together, we intentionally put the 20% down to avoid the PMI. But it's great. The 5-1 doesn't have the PMI, and that would affect that monthly payment. You know, if you're talking, $50
Right.
to $250
I mean, that's money
a month,
that
that's
you are
huge.
investing that you don't ever get back. You don't
Yeah.
ever get that money back.
Yep, absolutely. And another thing on this that I love about Great River being outside the box is how many loans can I get through Great River?
Well, I don't have a cap on it, so you can
Yeah.
have as many as you like.
Yes.
Yeah.
That's awesome. That's awesome. So just for, I guess, the comparison there is when you're in the box of the Fannie Mae, Freddie Mac box, you're limited to 10, right? You're limited to 10 per person. And if they, I'm married, so my wife, Erin, and I, if we were to acquire 10 mortgages with both of our names on the property, that would be it. We could acquire them separately, so I could have 10 and then she could have 10, given the credit checks worked for that, but that would allow me 20. There's no limit on these arms at all. So I think that's really, really cool. We've touched on a lot of things. We've touched on LLC versus personal. We've touched on seasoning. We've touched on LTVs. We've touched on amortizations. We've touched on prepayment penalties. There are none here in this particular product. There's no limit on these particular products. Man, I think there's just so much there that we've talked about. What have we missed? Have we missed anything?
We miss it. You know, the rate may change at any time. So as rates continue to adjust, but we have been really flexible about keeping that rate low. When the interest rates went up last month, we could have taken that rate up, but we didn't. We left it right where it was because it was beneficial to our clients. So we always like to put a sense of urgency in there. And, you know, that was another reason that, you know, I brought up how, you know, once you have an address, let's pull that address in there and let's get this rate locked in there. Because I mean, it could change at any time. We all know that, you know, they fluctuate daily. So, it'd be a huge surprise if I saw it change within, you know, the next month or two, but right now that's where it's at.
Yeah. You know, there's, Thomas and I actually wrote a book called How to Get Rich as a Doctor. And one of the pieces that jump out to me in that book was the timing issue. And Thomas actually wrote it in a chapter called The Myths About Real Estate, I believe. Thomas, is that correct?
Yeah.
So it was the idea of waiting for the right time, right? Like we're in a recession and then all of a sudden these deals are going to jump out to me, or we're on the upside, and the reality of it is there's really no perfect time, right? There's the time is now. To move now is the best time. Yep. So to move now is when you're going to be making progress towards your goal of creating. As an investor, I want to create passive income, right? I want to stop trading time for money. So as I make progress, I have to start in order to make progress. So the time is now. And Thomas put in that. Do you remember the quote I'm going for here? The quote in that chapter?
Yeah, I think so. It was something along the lines of don't wait to buy real estate and then wait.
Yes. I love it. Don't wait to buy real estate and then wait. So it just goes back to what you were saying, Jenny, and I really appreciate you bringing this up. The time is now. The time is always now, right? Last week, the time was now. Next week, the time is now. It's always now. The time is now. If you have interest in passive income and stop trading time for money, the best way to get there, in my personal opinion, is leveraging debt. And we call that good debt versus bad debt. We talk about all of these things, and the time is now. Don't wait. You can't time this stuff out. It's take the time, put the time up front to develop the relationships like with Jennifer Spicer from Great River Federal Credit Union, and finding a good real estate agent, finding a great property manager. Put the time in up front, because the time is now. The sooner you act, the faster you'll start reaching your goals.
That's
So
right.
I think that's a great way to wrap this up. What do you think, Thomas?
Yeah, I agree. Jennifer, is there anything you want to add? And also, how can people who are interested in your guys' product get a hold of you or someone on your team for your services?
So they can visit us. They can find my page directly at www.greatriverfcu.org, and that FCU is Federal Credit Union, so fcu.org, and you can click under personal and then mortgages, and then you'll see my page that you can go directly to. You can also reach out to me by cell phone. I'm very easy to reach on my phone, and my number is 901-289-1422. And although I'm in Memphis, or right outside I'm actually in Mississippi, but I call it Memphis because that's the biggest city that I'm closest to. I do work in all 50 states, and I work with clients all over the country, and got people in Arizona, Florida, North Carolina, Texas, New Jersey, Minnesota. They come from all walks of the area, and I build relationships with them, and they get the word out as well. And it's been such a phenomenal opportunity for me. And I'm so delighted and so thankful that I'm able to share in this adventure with my members and with the physicians and investors, because if I can grow your portfolio, it grows mine. And we're all in this together. And that's what makes a great team. It's what, makes the world move.
Great. Good stuff. Well, thank you for your time today. It's been a pleasure. I always love talking about this stuff and going over it. And I've jotted down some notes here for myself, learning in the process. Thanks again for your time.
Mm-hmm.
Anything else, Thomas?
No, I think that's it. We really appreciate you coming on.
I was happy to be here.
All right. Well, thanks everybody for listening to another episode of Real Estate Mogul MD, and we'll catch you on the next one.